Good afternoon, everyone. That's the clock on my desktop anyway, moving over to 2:15. So I'm going to get started on this. Firstly, good afternoon. My name's Ewan MacDonald-Russell. I'm Deputy Head of the Scottish Retail Consortium, and I'm going to hopefully over the next kind of 45 minutes or so give an overview of some of the things happening in the retail industry at the moment. That's going to look a little bit at some of the economic stuff that's happening and some of our monitors and explaining what happened within that. Going to do a little bit of chat about public policy and society, some of these big factors that are coming into retail, a little bit about what retailers are doing in response, some of the things that are happening, and at the end I will pick up the metaphorical crystal ball and attempt to work out what's going to happen next, a section that can best be described as it will almost certainly all be wrong. A little bit of housekeeping before we kick off. I've been asked by the organisers to first note that this session is being recorded, so if your camera on, if you make a contribution, then note that is. I'm entirely relaxed about people's cameras being on or off during the course of this. I'd note that it's probably best if you can keep microphones off unless you're kind of contributing, because background noise kind of, it kind of multiplies up as we go along with this. In terms of the format, I am very comfortable if people want to ask questions and stuff during the course of this discussion. This does not have to be a kind of, lecture from the front of the room. I'm very happy for it to open up and be discursive. Stick a kind of hand up through Teams, put a comment into the chat. I'll try and pick it up as we go. If I feel I'm ignoring comments or things that are being made, feel free to shout across and draw attention to it. Really keen for this to be as interactive as we can manage it. I guess with all that kind of housekeeping in mind, really just to kick off, if I can use technology, which I might. As I say, these are the four big things I want to talk about. I'm going to talk about the kind of stagnation, stagflation issue in retail. What I mean by that is this issue where we have inflation going up, sales being flat, what that means, and to talk about what's happening to retail. I guess the way I describe it at the moment is retail is at the sort of metaphorical heart of a hurricane, and that eye of the storm. And what I mean by that is not that things are calm at the moment or things are horrendous at the moment, but we've come through COVID, we've come through all those challenges within that, and we're going to go forward we're in this cost of living crisis, all the challenges coming next, and what that means for retail, a little bit of data to kind of flesh that out and so forth. So that's really a good start. But first, it's Scottish Business Week. Everyone's got something to sell. I'm no exception. I'm part of the Scottish Retail Consortium. We're the lead trade association for the retail industry. As the kind of sort of figures there, our job's to advocate on behalf of retail. We've got a membership that pretty much covers every single type, way and manner you can sell stuff within Scotland, within the UK, part of the wider British Retail Consortium. And we publish economic indicators, we do public policy analysis, and we do advocacy and generally sort of talking about how retail is awesome. So that's absolutely where my kind of biases are going to come from here. In terms of who we represent, it's pretty much everyone. If you buy something, there's a relatively good chance it's through one of our members very regularly. And as you'll see from the little graphic there, that covers the big supermarkets, it covers the big online pure retailers, people like Amazon, it covers the big high street retailers, John Lewis, Boots, Marks and Spencers, big out-of-town people, IKEA, B&Q, Pets at Home, and a huge gamut of other businesses from kind of huge one-site places all the way through. I think somebody in the background might have their mic on. There's a wee bit of chat coming through, so if just do a wee check on microphones, it's easy to sleep through. Either that or I'm being barracked for our members, which I'm going to be honest would be an early part of the meeting for that to happen. So to kind of move past, well, that's who we are, that's who they are. I feel a bit nervous quoting a Chancellor of the Exchequer. This seemed a much better idea a week ago when I started working on this, but it was Ian MacLeod back in 1970 who coined this phrase about stagflation. Inflation on one side, economic growth on the other. And that's something, sadly, in the retail industry in the last year, we've become really, really conditioned towards. Over the last decade in Scotland, we've had pretty much flat economic growth. We've had pretty flat retail sales figures as well. That kind of combination where we've, not really seen much in the way of growth. That's, and what then happened is, having had this really difficult time when trading was difficult, when costs were going up, we then ran into the COVID pandemic, something that could not possibly be anticipated, but which took the existing factors in the retail industry, the changing way customers were shopping, the advance of technology, and it threw it all at us in kind of a sort of 3-month period rather than the 4 or 5 years we probably expected. And what that meant, I suspect we've seen the positives of that, the ability to get pretty much anything delivered to your house incredibly cheaply and at timeframes that were never remotely realistic. We've seen the huge expansion of retailers into the digital space, and almost every retailer I come across now has some form of online offering. In some cases, that's just a marketing and promotional aspect. For most, though, it's about that physical transformation, and that goes from the biggest retailers you can think of, John Lewis and M&S and so forth, to literally the small independent convenience stores doing groceries as you want sent to the house. So that huge shift has come through. That's the upside. And from a customer perspective, it's more competition. It's kept prices probably below what they might have been. But on the flip side of that, on the reverse of that, what we've seen is a huge decline in particularly high street retailers. And that's partly because the way COVID operated, in that it had this big split between essential and non-essential retail. Terms were the way I would always reject, because I think defining what's essential has proved nearly impossible. But what we saw is those traditional retailers who've got the goods that everybody needed, your big grocery retailers, retailers who weren't inhibited by this, were the ones customers stayed with, customers increased spending with. It's the ones which were more discretionary goods. We're going to talk about that a bit. Those items that you don't necessarily need, but you might want. Those are the retailers who, during the pandemic, really struggled. Those are the retailers who were most at risk from the kind of pressures that came through with their incomes falling, with the number of businesses not being so much in place. So that's what we saw during it. That's why we saw such a fall in the number of high street shops. That's why so many businesses were forced to close. And we see there hasn't really been anything to replace them. If you go down, I was down Princes Street in Edinburgh, where I lived last week, and the reality is you can't replace a Debenhams or a Jenner's or a BHS for that matter with an equivalent type of store. There's no demand for it. Still is huge retail opportunities, and the St James Centre, George Street show that, but we're seeing these traditional retail places just not filling in the same manner that they were. So that's where we were at the start of the year, which was, if we thought, quite tough. And that was before we got a war in Europe and an inflation crisis. And that's the bit that's perhaps made things even more challenging. This is the picture coming into this year, and that's this enormous volatility. This is a Scotland and UK set of figures that shows the fact that in reality, these figures tend to trend each other. But Scotland has seen a position where we've almost had more inflated, it's huge swathes and challenges coming through. And that's why it's so difficult for people who've been working in retail, having to react to kind of, sales going up, sales going down, and all over the kind of position on what that looks like. These year-on-year changes have been absolutely enormous, and the graph doesn't kind of show this. If we did this graph from 2015 up to 2020, the axes would be between 5% on each side, not 120 and 60%. Just enormous volatility coming through. What does that mean that's happening right now? To give a kind of snapshot of where retail is today, we have three big monitors we use to track Scottish retail sales. So the first of those is our retail sales monitor. I've spoken about that. Last month, that had retail sales overall up 6.2% compared to last year, which sounds quite good, actually. That sounds really positive, really sprightly. Normally, we'd be breaking out the bunting for a 6% increase. That was a 1% increase in real terms. Once you hive in the impact of inflation into our figures, that's how much of it is simply extra cost. And what that translates to bluntly is we talk about value and volume. And what we saw last month is that the value was going up and the volume was falling. And to put that in human terms, people were spending a lot more money to buy a lot fewer items. And that's, from a retail perspective, terrible. We work on scale, on selling lots and lots of things with a tiny markup, and that's how retail business works. And we can see within those numbers, if you break them down, as we do, by grocery and non-food, so that the kind of food and non-food aspect. And on the food side, sales are up 10.3%, which is just an astronomical rise. Kind of, we don't really ever see numbers of that scale, but that only translates to a 0.9% increase in actual value sales, and so 9% of that is just inflation. And actually that will be up next month, because the September figures were a bit higher than that. Conversely, non-food sales, they look quite healthy at a 3% uplift. In fact, they're down by 0.5 point. So that's what when we talk about what's happening in retail right now, it's so important that it's really hard because as a customer, you go into a supermarket or you go into a clothes shop and go, well, why is everything more expensive? Why am I, these guys must be making money out of this. Reality, they're not. It's the opposite. They're either flat or barely seeing anything. And if you speak to other parts of the supply chain, and we speak quite regularly with things like the farmers groups, and when they talk about some of these things, that they are heartbroken at how little extra money they're getting to receive back, how extra little money is going on the shelf, because the costs they're seeing coming in are so high. Come on to that in a minute. Two other things I want to kind of flag in terms of retail change at this moment. The first of those is we talk about vacancies, shop vacancies. It's actually slightly better than a year ago. So the most recent one we did in Q2, 15.7% of retail units are vacant. That's about 1 in 7 are vacant at the moment. And we don't see any way that that's likely to change and improve. And that's worth noting that includes a huge amount of incentives and what is, let's be honest, that this is, as I say, the good bit, I suspect, before the cost of living stuff really kicks in across the autumn. The final one we look at, and this is probably worth talking about in a little bit, just to explain what we've seen in terms of how customer behaviour has changed. We do a footfall monitor. So that tracks basically how many people are going, compared, apologies, a typo in the slide. That footfall figure is 14.8%. That's compared to 2019, not 21. That's pre-pandemic. When we talk about what COVID did, it's done a couple of really big shifts in customer behaviour. The first one is that 15% of customers don't go to traditional retail destinations anymore. So we're not seeing customers going to town and city centres at all. If we look at Edinburgh and Glasgow, I think the figures are about roughly 12% down on pre-pandemic. And the sort of point I guess I would make from that is if Edinburgh and Glasgow are outperforming that minus 15%, it will be worse elsewhere, in Dundee, in Aberdeen, Inverness, and also in small towns in particular. And I think everybody knows, both from the data we see, but also anecdotally, we know customers aren't going back to town and city centres. So sort of, in a where's Wally sense, what's happened to these customers? Where are they? If retail sales are about the same, roughly similar, but nobody's going to shopping destinations. And by shopping destinations, we do city centre, we do shopping centres, we also track out of town. And the fall off to out of town retail is significantly less than this. We've only got UK data for that, which is why it's not on there. But what we know is that customers are either ordering more stuff online, or they're going to out of town or to larger format places. Now that's partly because they're going back to that slightly bigger shop moment, they're going to larger retailers. A lot of it, I'm afraid, is very straightforward. It's easy to drive there. And for all of the political pressure, and we see an awful lot of dialogue and discourse about trying to get customers to move to public transport, to move to sustainable transport and all the rest, the reality is customers like driving to do their shopping. And that's because if you're buying lots of shopping, it's a pain not to put it in your car. If you're buying lots of items and you've got kids, trying to get them plus up shopping plus public transport is really difficult. And that has been exacerbated in recent months because there is at the moment uncertainty over some of that public transport. If you're not sure when the last train's going to leave Edinburgh, you probably don't go on a big shopping trip into it. So we see these dynamics playing through on a huge level of technological change, of the fact that if I want to get a new item, I'll get that from a retailer. One of the things we see the way retailers have evolved in consequence is that their offering is massively different than it used to be. If you look at retail like Next, it's a great example. They used to just be a kind of clothes shop. Then they built an online business, and that online business was always aimed to be about half of their turnover. And actually now, if you look at their model, if you go to their website, they're almost an online marketplace at times. There's lots of fashion retailers who don't really have a big high street presence or no high street presence at all, but they've still got the fashion retailing arm, but they do it through that platform. Amazon led the way with platforms, with marketplaces. And we see this evolution, the online space creating these kind of models where customers are picking, going to one retailer's website, but they're actually picking between different brands within that, and that kind of crossover, those partnerships. It's incredibly complex now at the back end, but for the consumer end, it's really, really simple. You go to 3 or 4 of the websites you like, and you can search through, compare items, cost, prices, deliveries. So we're seeing that sort of consolidation from a consumer perspective, even if from behind that there's actually really, really big complexity in there, which is good because what's coming is going to be exciting. Graph there is pretty stark, I think. It's a wee bit small on this thing, but it shows that yellow line, sorry, that blue line at the side there is inflation from the middle of last year. It's about September last year we got the crossover where we started to get shop price inflation going up. Just to explain what that is, for anybody who's an economical statistical wonk behind this, the BRC and Nielsen have for since 2005, so 17 years, run a shop price index. We've got a basket of about 500 items. We kind of compare that week on week in the same sort of locations. They're spread across the UK and track that. The ONS does a similar thing, by the way, for its CPI metric on these things. We use different baskets. There is a long and very, very clever argument I do not understand between the two different sets of economists on who has the better metric. The kind of relevant bit here is we've used the same metric for this amount of time, as indeed the ONS have. So it's a pretty good metric of what's happening for an ordinary basket. It's quite set around a bit more basics, perhaps, than what people get. As you can see, the headline figure for September it's up 10.6%. That for food, it was up about 5.5% overall, which is a record high. It keeps going up. It's gone up for 14 months in a row. We would anticipate that's going to continue. We'd anticipate that's going to continue for the next few months for a couple of reasons, and I'm going to talk about what's been driving that. Three absolutely huge things that have driven that kind of process. I'm not sure what's happened to my slide deck there. It said that somebody took back control, so apologies. I'll just bring it back up and we'll get back to the right slide. Gremlins in the system, or somebody wants to kind of, steal my slides from me, which makes sense. I guess there's three big things within this. The first one is something that's a hangover from last year. We saw this last year: the cost of shipping, the cost of logistics, the cost of moving goods. So that's tied into fuel costs. That's tied into the huge sort of challenge we had in international shipping last year. Post-COVID, when the kind of Chinese economy stopped and restarted, and with a shortage of semiconductors, and that sort of threw global trade flows out, which put really big costs in at an input level on that big second. The second part of that came through as well, though, is, and we know this in the UK, is things like driver costs became massively up. And I remember a year ago kind of making pleas to government ministers and so forth, saying, we really need to look at the HGV driver crisis. We don't have enough, and we got a rather unhelpful response of just pay them more. Our members broadly responded by just paying them more, which is in one sense great if you're an HGV driver, and that is a very difficult, very challenging, quite hard job. So I don't begrudge them getting more revenue, but it's meant, of course, that cost was fed into the system. We've seen the same in distribution and warehousing where there's a labour challenge, and those costs again of paying these workers more. Again, it's a very unsociable job, a difficult job, but those costs again coming through, and that's where that shipping and labour thing kind of come together. The labour point builds on I guess what we've seen throughout the economy. We know people's energy costs are going up. We now know after last week, and we'll come on to that in a bit, that people's are seeing mortgage cost, interest rates have been kind of creeping up, and those costs coming in, and of course the cost we're talking about, our own, we are part of the problem as well, in that food and other costs and other items go up. That means people simply don't have as much money. So from our side, one of the ways our members have responded is by paying higher wages. But in a way, that's almost a kind of loop, because we put the higher wages in, but then to a large degree that will be replicated through shelf edges. I'll talk about exactly how retailers done that in a bit. And the final thing, and this is the bit that the war in Ukraine has had a huge impact upon, is the cost of commodities. It's not completely the cause of the cost of this. Some of these are wider changes. There's also international competition, other markets opening up that are looking for some of the things we've done. But in Ukraine in particular, sunflower oil, a lot of grain, a lot of these items simply, of course, have been pulled off the market, taken away, either because of blockades or the obliteration of farmland. The consequence of that has been to send a lot of costs shooting up. And when that's combined with the consequence of cutting off Russian energy supplies, which of course therefore puts greater costs onto using other energy, that has a huge myriad of knock-on effects. Two really clear examples. The first one is fertilizer. Making fertilizer is quite high energy, it's quite costly. If you don't have that energy cost, you can't justify selling the fertilizer, but that's going to affect farmers' bills coming in for next year. But another challenge is that one of the production of fertilizer produces carbon dioxide as a byproduct, which is essential for, well, all the fizzy drinks and so forth. And as an avid drinker of various of those, you need it in that, but also for things like animal welfare, for studying things. There's a huge kind of knock-ons. And once the kind of economy gets kicked a little bit, all these things start to spike through it. The second one is sunflower oil. We use sunflower oil in a huge number of manufactured products. And so changing that, firstly, you've got to find a substitute, and those substitutes are either not as good from a processing or manufacturing perspective, or they're more costly to put in. So that adds extra kind of costs through it. And of course, we've got a huge number of regulatory barriers then to deal with. How do we make sure, if this product used to say it had a label saying sunflower oil, what do we change it to make sure we're compliant, that there's no risks and so forth? And again, all of these processes, that they add cost, they add complexity, they make things a bit more challenging. So that's from a retail perspective, the kind of big economic stuff we're seeing and what that means. And I guess the observation that we make from that is actually, there are two huge things here. We have a cost of living crisis for our customers. We know customers have less money each month. With that less money, they're having to spend more of it on their essential items. So they're spending it on energy, heating and eating. We know that grocery costs, but also essentials are now what customers are spending money on. I'm very happy to share the slide deck afterwards. Nothing in there that's terribly exciting. What I would say about the way customers are having to respond is they are focused on essentials, and they're focused on what they want right now. So that in food case is obvious, and people focusing on value, we'll come to that. But also, they'll buy an item because they need it. They'll replace their shoes because the shoes are broken, but they won't buy a new pair. And that's forcing retailers to react in a number of ways. So that's what's coming in on the big macroeconomic, big scary sort of off-world area there, if we like. What's coming next is the kind of what I'm going to talk about, the kind of policy in society, which is a big catch-all for all the stuff that both government but also that kind of customers are looking for, because these things actually often cross over, and a lot of the time politicians will push an agenda because actually it's what consumers are looking for as well, and retailers are often a bit ahead. So a few things in here. The mini budget, I guess I'll put a caveat on this. I finished tidying these slides up at about 10:30 this morning, so I was accurate with what was in the mini budget at 10:30 this morning. If it's changed again, then caveats on that one. I guess there's three big things from a UK government policy perspective that Scottish retailers are particularly interested in. We obviously had the mini budget last week, and it had a huge amount of stuff around taxation. A lot of that taxation stuff wasn't especially relevant to us, to be honest. Grocery retailers generally aren't particularly high profit businesses, so corporation tax changes don't have a huge effect on us. Our members tend to have pretty small profit margins. They generate this by selling huge amounts of kind of items, and business rates, which we'll come on to, which is the devolved tax anyway. That's the one that is a really big issue for our members. The income tax stuff, again, it's only really relevant in that it really depends what the Scottish government would do, and again having to kind of come back on to some of that kind of stuff. The two ones that probably did have a bigger effect for us were the return to VAT free shopping. That's actually really good news. We've been campaigning on that for a while. We've sort of been part of a rather big alliance which literally included the Scottish government on this to try and get that back. And that's because actually for luxury retailers, it was a really big draw, was the sort of customers who are trying to get, the customers coming from the United States, from China and the Far East, from other kind of nations. For them, actually, the attraction of coming to London, but also to Edinburgh in particular, Glasgow a little bit as well, Manchester, Leeds, these places that the luxury brands there, if you're selling a Rolex, the VAT difference makes a really big thing. Scotland as well, when we've got premium whiskies, and you look at, for example, the Johnny Walker experience at the end of Princes Street, for these type of businesses, actually taking away some of those VAT challenges, not for alcohol, but for the other things, hugely helpful to drive that tourist trade back in. Tourist footfall generally has been pretty weak the last couple of years for obvious reasons with the international restrictions. But actually, this might be a way that we just get a little bit of footfall, a little bit of customers coming back. And again, that's probably only going to help the big cities to a large degree. Scotland's quite a lot of tourist destinations, so we were quite happy about that one. The changes to national insurance, the NICs rise, obviously that has an effect on consumers who will have a little bit more money potentially to spend. To employers as well, that was a cost that was going to have to be accommodated too. I guess just to touch on the wider issue of economic growth, and my director David Lonsdale was writing in the Herald this morning about this too. Leaving aside the details of the government policy, some of which appear to have unravelled very quickly, the diagnosis of the problem isn't necessarily wrong. The UK generally, and this is also true of Scotland, has had anemic growth for the last decade for a huge number of reasons. Resolving that and returning and dealing with that problem is going to have a huge impact on the retail industry generally. Retail sales predominantly track against GDP. Broadly, if the economy is growing, people have a bit more money, probably spend a bit more, and that consumption drives that virtuous circle, which is good for people, but also drives pretty high tax revenue. And that then lets government do the nice things that we all kind of wanted to do, to properly fund public services and to get into that place where those things start to help and reflect. So from our side, I think the fact that the UK government might be considering looking at planning in a more radical sense, probably not the worst idea. Infrastructure projects across the UK are horrendously long, convoluted and painful processes. Of course, it will be politically wildly unpopular, so we'll kind of see how it do. And I guess that second question about skills, labour, migration, the obvious challenge if you restrict freedom of movement in any sort of sense, that is going to impact on the ability of your economy to grow it. So there's an axiomatic link between the two. How you do that, what mechanism you need, we wouldn't have a strong view of, but that labour movement is generally a positive thing if you want to grow your economy. We would note the UK government still has the ridiculous policy of the apprenticeship levy, which it doesn't really work and no one thinks works very well, but no one's prepared to open it up. So there's an area there where there's perhaps more Gov could do. I'm not going to talk about EU exit particularly in detail, because we never took a view on it as an organisation. It's one we're kind of, for obvious reasons, not to. I'd note that on the frictions and the trade part of that for exporting businesses, it's quite burdensome, obviously, now having a different regulatory framework to go through if you're exporting stuff into Europe. Our members certainly notice it makes it more challenging in some cases to engage in certain activity, and that changes whether some things are worthwhile or not. It's different from an import side, obviously, because lots of those controls haven't come into force yet, and I'd be surprised if they come into force in the near future. So, for retail, it's slightly odd because most of our businesses, imports is a big part of it. Of course, in non-food areas, lots of those imports aren't from the EU anyway, so it made actually very little difference. Labour, I've kind of sort of touched on already. I guess the final thing is, and this is particularly topical with the announcement of the kind of repeal of EU legislation stuff that came in last week, which we're still working through and is definitely way above my public policy nerdery brain. But what we would say within that is that there's a real potential for increasing divergence within the United Kingdom and between Europe. And there's a sort of challenge here for governments collective to kind of decide at which points are you happy for things to be aligned. And as a retail industry, we're very big fans of alignment as much as possible because we sell at scale. We want to sell in different markets. Every time we have to do something differently in a market, it just adds cost and complexity. So there's a kind of challenge there of alignment within the UK, alignment with the EU, and how those things come together, which is something as a retail business, retailers generally are thinking about quite carefully. A Scottish perspective. I guess to start with the economy and Scottish economic policy, in the short term, there's two really big levers that we are interested in. The first is non-domestic rates. Retail pays about 22% of Scottish non-domestic rates. That's a lot we're about 10% of the economy, so I think we're getting a tough deal there. I guess the question for us is that every year the Scottish government sets a poundage, which is how much the tax rate will go up by. It's already at a 23-year high, albeit I'd note that the main rate is marginally below that in England. I guess the challenge within that is that normally that's set in line with CPI each year. If they use the August CPI, or if they use the September CPI figure and it's roughly in line with August, that will be a £60 million a year increase in the rates bill for retailers alone in Scotland. And as I hopefully have explained in the starting part of this, there isn't a lot of money kind of left lying around there. So from our perspective on Scottish public policy, business rates is absolutely top of the line. There's a little sub point to that. In Scotland, we have a thing called the higher property rate, the renamed large business supplement, for those of you who followed the Barclay reform. That has a higher top rate of tax for big properties than elsewhere in the UK, certainly elsewhere in England. Because I represent large shops, we obviously think that anomaly is unfair. We'd like to see that kind of rebalanced, and we think it provides an investment deterrent. The Scottish Government said they'll do it by the end of this Parliament. The Barclay Review of Rates said it should have been done by the end of the last Parliament. We're big fans of that happening sooner rather than later. I guess the second thing on taxation policy is income tax. It is fully devolved. I'm not going to talk about the top rates of income tax, A, because it obviously has changed over the weekend, and B, from a retail perspective, it doesn't really something we would opine about. And that's because our focus on income tax is how our particularly less affluent and modest earning customers what's their tax rate looking about? Because they're the people who, if they have a little more money, will probably go and spend it. And our locus on this is entirely, can we get people to spend more money in shops? It's a very selfish perspective, but I won't apologise for advocating for that. So our question, our sort of interest in this is what the Scottish Government will do come December when it comes to their budget on, are they going to go to a 19% income tax rate? Are they going to keep it the same? Our position would be very much we don't want to see that tax rate go up for those modest earners. We wouldn't necessarily offer that it was perhaps time for a cut or not, because that has pretty huge fiscal considerations, and we're not perhaps bold enough to ask for huge amounts of money kind of coming off there. But I would say that particularly for people on the lowest incomes, anything that can help on that side. One of the things we've advocated on the other side of that is the Best Start Foods programme. Is there extra funding that could go to that to help people who are pretty difficult times for receiving that benefit? Can they get an extra bit of support there just to offset inflation? So that's the very short-term stuff for this year's budget that we're very much kind of focused on. I guess the bigger thing is you've got I've got two kind of big chunky things. The NSET, which for those of you who don't live in the public policy world, and it is wonderful, is the National Strategy for Economic Transformation. NPF4 is the fourth iteration of the National Planning Framework. I believe it's an improvement on Tokyo Drift. And before that, you've got a retail strategy. And I've kind of bulked these things together, partly because there's about 300 pages of matter to go through there, and a lot of it's pretty hard going. I guess the wider question is that we do have a real economic challenge here, and there are good things within all of these strategies, but they're very focused on doing things the way we are, but a bit more efficiently. And I guess our challenge or our question, certainly on the first two, is that actually going to unlock growth? Is that going to really help Scotland's economy kick on and move forward from perhaps where it is? It's doing fine, but I think we all know that greater growth would really help us with the really big societal challenges we're facing, but like funding public services, moving to net zero, and indeed just raising people's living standards. The second bit, and the retail strategy and town centre strategy sort of come together on this. You'll have heard me speaking earlier about the idea of how footfall, how customer behaviour is changing. Obviously, retailer behaviour has moved with that. I remember a chief executive telling me that 15 years ago you needed 600 shops to cover the UK, and 5 years ago you needed 150, and that number is dropping all the time. And so from a town centre perspective, you're going to have some town centres which will remain retail destinations because they're vibrant, they're attractive, people want to go there. And in those places, there's lots of things we can do to make sure retail's part of a really powerful ecosystem that's got, kind of, it values it, but it also recognises that retail only works if you've got great hospitality, if you've got great attractions, you've got good transport links, both for private and for public transport. Those things can work. But there also are going to be some places where retail simply is not going to play a significant role in town centres anymore. And that's because people aren't going there, they aren't shopping there, and retailers won't continue that sort of service in those places. And I think when you're thinking about town centres or retail or what's happening on that broader sense, it's acknowledging that the way things were 10 years ago is never going to happen again, and the world has moved. And from a customer perspective, I adamantly believe it's significantly better. From a retail perspective, so much of the kind of stuff you didn't want to be doing has moved on. But I would also say that there's a bit of sort of blunt truth here, because I think if people look at high streets, at the point that a big retailer says they're leaving the high street, that isn't the time to start intervening. That's the time it's too late. And there's probably a few places where that discussion is still a live one. So it's all terribly upbeat, isn't it? Societal stuff here. This is a wee bit of mix of kind of customers, government, and everything else. I've got four big things I think retailers are focused on, and this is a bit actually where I'm speaking more from what retailers are doing as much as anything else. It sort of crosses over to the next section too. I think the first one is on the environment. As somebody who does public policy campaigning, I pretty much weekly get told by whichever campaign group that the thing that they believe in is the most important thing in the world, that they absolutely should be conscious and supportive of. And that's, if I'm honest, not always true. The environmental stuff is. Retailers, customers really care about this, and customers care about businesses that don't do it. And it's really important, certainly if you're a mass retailer or on any scale, that you're doing these kind of committed to greenery. And there's kind of three big things we focus on. The first is net zero. We've got a BRC has a program sort of target to get all of our members to fully net zero by 2040. That's 5 years ahead of the government target. And within that, there's already a huge amount of work ongoing. Retailers are in quite a good place on some of this stuff because the economic arguments and the environmental ones have aligned for a while. So we've been moving things like logistics fleets to net zero or to minimal emissions where possible, refitting stores to be energy efficient where possible. And anyone who's working in retail who's on the kind of cusp of that decision or not, that everybody I know is moving into that. How can we make sure our freezers are more efficient? How is the lighting going to be moved to LED? How do we get these things? Do we need this big open unit at the front, which is going to be draining a lot of stuff? Some things are worth it because, for example, in convenience, customers really value chilled enormously. But in other cases, there's that question of, even before we got an energy crisis, whether actually this was going to be, something that you had to look at. So I think that's happening. I think from a government perspective, what we really want is leadership rather than intervention. If you think about logistics, retailers are refitting vehicles, they're refitting depots, supply systems all the time. So that's an ongoing kind of process. If we knew what we were going to have to do for net zero in terms of logistics in 5 years' time, retailers will be investing in it already. We just don't at the moment. We don't know if the future's electric, is it hydrogen, is it the next thing we've not kind of thought of. And governments collective, the sooner they can come to a clear view on what the future looks like in these spaces, the sooner you'll find the industry and retailers coming in behind that. What we probably don't need as much of, and we certainly have a plethora of at the moment, is direct government interventions in telling retailers how to get to a social good, particularly on the environment. We have a deposit return scheme coming next August in Scotland, and anyone who's worked in retail or food and drink retail has got stories to tell about the enormous challenges. That's not because DRS itself is particularly difficult or particularly challenging, but the way that this particular one has been set up, the way the regulations are written and they're being interpreted, are making it nearly impossible to deliver. And I've been doing this for 7 years, and there are times where it's sort of as if Kafka went on holiday to the Byzantine Empire and thought, let's come up with something really difficult this time. It's immensely challenging, and that is a really good example of how regulation isn't helping with the environmental consequences we want. The deposit return itself is perfectly fine. The way we're doing it has got quite difficult. That's one of our big pleas to government, is to work with business. Tell us what we need to do. That's fine. We totally get that necessity. Customers are telling us the same, but how interventionist you get can be quite challenging. And there's a lot of activity in this space. So alongside deposit return, which will cost Scottish retail about £250 million next year, we've got extended producer responsibility coming in next year. There's quite big challenges about how that's brought in. And I know that certainly our members feel that that scheme being delayed so it gets it right. And the reason that getting it right matters is that's going to, across the UK, be about £3.3 billion a year, so to the retail industry. Huge big cost coming in, and EPR, extended producer responsibility, is all about businesses taking responsibility for the packaging they're producing, for the materials, and we totally support that. We are involved in the system at the moment. We want a really good system that incentivizes businesses to do the right thing. We don't want to be told that, we don't want an incentive where people are using black plastic. We want to use the right materials. But if you don't get this set up right on day one, the incentives will absolutely not lead to that. And again, the third thing, and this is, we've got a circular economy bill coming through at the moment in Scotland. We put a response in, and it's got a graphic in it of the 25 separate actions that government's kind of doing in this space. And I guess the question is, when you've got businesses who are pretty much on the ragged edge at the moment, and you've got customers who are definitely feeling that, are all of these interventions necessary? I've mentioned levies at the end. There's plans to put a extra charge on coffee cups every time you use a disposable cup. Not just coffee cups, but any type of disposable cup. That may well be a good policy measure or not. Is it the right thing to do right now when high street businesses are struggling and customers are? I'm not sure, but the timing is kind of great. So that's the environmental stuff, hugely important to retailers, even at the moment under cost of living stuff. That problem hasn't gone away. Public health, our members do a lot on. There's a couple of big things coming there. There's a high fat, salt, sugar legislation. It's come into force in England last week, or some of it came into force in England last week. The government's consulting on doing the same up here. There's also measures on mandatory calorie labelling. They've come in down south. They're being proposed up in here. We think that that's quite a good idea if it's done well. Minimum unit pricing of alcohol, again, that's being reviewed at the moment, what that price is. I guess from our perspective, we don't have strong views on it. We supported the introduction of it. We implemented it. I think there's a question mark about what are the health benefits of raising the price? I think possibly that there's certainly some evidence that the MEP has changed the profile of drinks being bought. There also seems to be a challenge that people who are particularly struggle with alcohol abuse treat it as a giffen good, i.e. they will just keep spending more and more on it. That's one for the economists, but it's another thing retailers are keeping in mind, as well as a pretty complex alcohol licensing system. Two others on this, and then I'll go to kind of what retailers are doing. First is diversity, and this is the why is retail woke question, woke being a bizarre word, which I think just means being nice. The reality is retailers, firstly, are about the biggest private sector employer around. There's 238,000 retail workers in Scotland, and that means that the businesses tend to be pretty broadly reflective across the whole of society, and that means there's a reflection of trying to understand what's happening for customers. Two, quite frankly, from a leadership perspective, from a representation and visibility perspective, we've not been good enough in the past. We have a diversity and inclusion charter our members have signed. That's tracking data. It tracks, for example, the leadership teams. You've got big retailers. Are they, what's the balance of gender? What's the balance of ethnic minority inclusion? And so looking at that side of it from a business perspective, how do we make sure that the people who are leading and running and delivering in retail businesses better reflect the population we serve? Ultimately, we serve the whole country through our members. We have to be representative and reflective of that. And we're seeing that too, though, in things like visibility, when you look at advertising campaigns and that. Now, one, that's just the right thing to do, but it's also for brutally commercial reasons. The reality is that the consumers most likely to switch brands, the consumers who are most attentive to the retailer brand and value behaviour, are younger shoppers, and younger shoppers are the ones who are most fickle. And I'll talk about fickle shoppers in a bit, but those are the consumers who will, think about, does that business I'm spending money with reflect how I feel? And if I don't feel that way, I'm going to take my business away, and I probably won't go back. Anyone who works in business knows that your marketing spend is mainly spent on trying to get people into your business. Retaining them then is the best thing you can do, because it's so hard to get new customers. Retailers don't want to lose customers, particularly over issues. And you'll find that it tends to be in some of these societal stuff, they'll try and stay out of it. But when they're forced into a position, as a rule of thumb, they tend to take what could be seen as a more socially progressive position, because that's actually where their workers are. Quarter of retail workers are under 25, and it's also where the customers are broadly likely to be. But it's quite interesting within all the discourse you see around it. Shops are surprisingly progressive in that sense. I guess the final thing I'll just note about workers and labour, and I've spoken about the fiscal changes we've seen within that, but actually across the industry, there's a reflection that we need to do more with our workers, but also that retail work and retail jobs are changing. The type of work being done is different now. When I first worked in public affairs for a grocer about 10, 15 years ago, we still had people with clipboards going around shops, filling in bits of paper and sending them to head office. That's all automated. And so much of the rubbish jobs in retail have now gone, or rubbish work has been outdated. It's been replaced instead with technology. That's probably good because we're not doing the terrible jobs, but it also changes how many people you need. It changes the skills of people you need, and making sure that people are ready for that is the next step. Customers, colleagues, and Christmas, or what retailers are focused on right now. So, kind of 7 points within this, some of which I've alluded to already. The first one is retail pricing at the moment and retail ranges. Everybody's aware that customers of pretty much every description are struggling. Everybody's got a bit less money than they had. Everyone is quite focused on what they're spending upon. Energy prices are, even with the energy cap coming in, they're still going up at an eye-watering degree, and that's sucking away money. So in grocery, you're seeing that the kind of everyday value, value ranges of products coming in, low priced, and keeping those prices really low and being hyper competitive on price with each other. And that's one of the bits where having a really good retail market that's pretty aggressive with each other helps. If Aldi's baked beans are 55p and Tesco's are 54p, we know the customers will go to the other shop in response to that. We're seeing that come through. We're actually seeing, even in places like convenience, which didn't always have that kind of profile, that recognition that if they haven't got things as low priced as possible on those value goods, then customers simply won't come. The second thing we're seeing coming through is, within that, there is that ranges are adapting to that. There's a little bit of a focus on which products can you put in a value range. There's a little bit of a focus on which products which are higher margin that customers might go for. And But the sort of thing is that we talk about people switching down and trading down their shopping. In some cases, that will mean that somebody goes from Heinz beans to a value brand worth of beans, for example. In other cases, though, it might be that somebody will get a posh meal deal rather than from a kind of, an M&S or a Waitrose, rather than go out for dinner. So actually, when you look at ranges, when you look at what that is, it's not just as everything must be cheap. It's trying to find those pinch points where when customers are choosing between things, will they go out for drinks, or maybe actually they'll get a kind of really nice kind of bottle or something. So there's a weird sort of hybrid. It's not just a question of everything being super cheap. It's trying to find all those points across the business. Same is true in non-food. You've got retailers who are really very, very brilliantly focused on essential goods, on those items, and the other ones who are thinking, how can we attract people to get this item, whether that's technology, you're going to be in the house a bit more, so get a better television to watch your films because you're not going to the cinema, etc. So that's the big ranging and focus that's happening there. Also a focus on smaller, slightly cheaper goods, because we know that large items in particular are doing pretty poorly. The GfK Consumer Confidence Index reflects that. I think the third thing is that retailers are adapting in constantly is channels. So we know that that's sort of when I spoke about that probably 3 or 4 years ago, it was they were building an online website. I think it's now the way that that's evolved, to omni-channel retailing. So you see quite a lot of high street shops now are as much showroom as they are actual kind of retail warehouse, if you like. It's about, we've got some items here, but our website's got the rest of them. We can order them in, we can get them picked up here, we can get your house here. Getting that sort of three-way ecosystem between online, between physical stores as a return point as well, and getting customers into that model. We've got, as I spoke about earlier, partnership working, where we get retailers whose brands will be sold through different outlets, through different retailers, because that's the best way for them to reach market and those alliances. And the way also the channels to market have changed. Yes, you've got your own website. Yes, you've got a marketplace website. But if you're trying to reach customers, television and radio advertising are great, still vital, but also you need to be looking at your social media ads. You need to have social media platforms. On some hand, is that trying to make something go viral on Twitter? That's actually focusing a lot on things like Instagram, things like TikTok, which we know young people are particularly in, and using those things in a way that works as authentic, because customers are so aware these days of things that look fake, that look a bit corporate-y, and trying to find that line between promoting brand, not breaking your brand values, but being interesting is a constant tightrope that we're seeing retailers put a huge amount on. And kind of four others, and the next two, customer service and colleagues, are linked. The 4 things customers care about the most at the moment are price, and customer service. If you go into a shop and you get poor service, or somebody's rude or dismissive or ignores it, in a world in which customers are pretty fickle, customers have got huge range of choice, greater choice than the product at the moment, it's a buyer's market. What that means is that good customer service is worth its weight in gold. If your customer gets a good experience, they'll come back, they'll say it, and you get that word of mouth. You get that little bit of loyalty, which businesses are going to need, quite frankly, over the next few months if they're going to maintain position. But that comes from having colleagues who are well trained, but also enthusiastic. And you won't get enthusiastic colleagues if you're not looking after them, if you're not giving them decent pay, decent conditions. And one of the things we see retailers also doing at the moment is trying to adapt to the wider labour market, yes, but actually to the needs of customers. At least one high street retailer has already announced they're going to be doing free colleague meals over the winter. Now that's a damning indictment that they feel that colleagues are going to need that. They're going to need to come in and get that kind of support, but also it's a way of ensuring that they're getting nutritious food, that they're getting kind of warm stuff, and that regardless of the wider economic cataclysm we're all sort of facing at the moment. And that goes alongside higher pay, good conditions, all that kind of stuff. Looking after colleagues is something that retailers are doing more and more. You want great staff, you want to retain them and look after them. And I think it will continue to be a bigger focus. We're sort of moving slightly into the future looking now. I guess the last two, one is discounts. It's again that bit of customers being difficult to get. How do you get them? How do you attract them? We're seeing already retailers looking at discounting products, and that's partly a consequence of volatility of retail sales. Means that buying stock is really, really hard because you're buying it 6 months out, and at the moment I don't have the first idea what the economy looks like in 6 months. I don't really have an idea what it looks like in 6 days. In that world, if your stock is slightly off, if you've got a little bit too much or less, discounting it, getting it out, you get customers into the store with good offers, or you get them to your website with good offers, and anyone who, like me, who gets barrages of these things about 3 times a week, But on top of that, you also, you get that stock out of warehouses. You're not having it hanging around. It's not giving you a cost with warehousing being as expensive as it is. And finally, and I'm actually going to move on to my last slide here before I talk about Christmas, because this is the last place. This is my attempt to predict the future, which will definitely go cataclysmically wrong. So no caveats on this. I'm not an analyst. I'm not an investor. Christmas, the last couple of years, we've seen it pretty flat. I think that's probably what we'll see this year. I think, we're going to see inflationary pressures. We're going to see the basic goods people need going in there and pushed up. And we know people have less discretionary spending than they had before. I guess against that, the counter argument about this year's Christmas is customers haven't had a big Christmas for the last few years because of COVID, and we desperately hope we don't get more lockdowns or more COVID surges, which would be really hard. On the assumption that doesn't, though, again, if people perhaps aren't looking at big holidays, if people have had to shrink down their world a bit, Christmas might be a thing some people are able to put a bit more resource in. We hope that would be quite helpful. Against that, obviously, there's going to be some people who heating and eating is the priority, and there simply won't be the resources to do that in the run up to Christmas. Now, my opinion is those things to some degree will balance out. I think we will also see a really big push from retailers in the grocery side to keep the cost of Christmas down, to try and, where possible, push those prices down, even for that 2 or 3 weeks. That's partly because it's a big promotional period. You want people in store buying the full basket, but also because there is this recognition of where families are making sure that an affordable Christmas dinner is something that can be managed. In non-food, the really interesting thing to watch for is when discounts and that come in. Every retail strategist I speak to talks about, we want Christmas early this year. We want to start people thinking about Christmas early, start Christmas trading early. The 3 months starting from pretty much today through to Christmas is the golden trading quarter. That's when the really effective revenues come in, particularly November and December, which are worth about 1/5 of the year to non-food retail. And what those businesses want to do, they're going to try and pull spending early and get people to spread it out so they can afford it. But also, I suspect if that's not working for some retailers, if they're struggling with that, it will be looking in the first week, second week of December. When do discounts start? Retailers hate discounting products in the run up to Christmas. You want items at full price. You want your best stock, the best things there, but going at full price. I think this year, with all the pressures, you might see that coming back. Three quick things to finish with. I think customers are going to continue to be fickle. Customers are going to continue to be very value-led, and it's looking after them. It's going to be absolutely crucial. We're going to see retail businesses continue to innovate, continue to look at new ways to get to customers, new ways to improve the productivity of their businesses. And the final part, which I've titled slightly tongue-in-cheek as Rise of the Robots, automation is going to continue to play a big role in stores, with labour costs going up, but actually with recruiting really good workers becoming harder and harder. The incentives for making the investment in technology, particularly in distribution and warehousing, which is both hard to get and where the big returns still are to come, that's where I think people are likely to make the really big changes over the next few years. That's all the kind of comments and stuff I've got. My email address is up there, my Twitter handle is up there, you can find me on LinkedIn or other places. If anyone has any questions or comments or observations, delighted to answer them. If everybody has heard quite enough about retail and the sort of challenging sort of prospect ahead of us, very happy to free you all to go and have a cup of coffee before the networking and so forth later on. And thank you so much for taking the time to come and listen today.